I'm seeing price reductions across the board.
Yes.
Everywhere. And it's not like small decreases. I mean, I'm seeing $5, $10, $15,000 decreases. We're working our way to a balanced market. I think it's starting to stabilize.
What's up, Megan?
What's up,
Welcome
Todd?
back. Episode number
you.
2, like a repeat, you know?
Exciting.
So, the other day I was like, I need to do Birmingham market update.
Yeah.
And I was like, who else would I rather do this with than Megan? And
I appreciate you.
No, because you do a lot of business. And just an update, we had kind of talked about you starting the brokerage. You're full on.
I'm full on.
So that's really exciting. How's that going?
So far, so good. I mean, I think that it's, it's a few learning curves, right? Because you're going from being an agent to being a broker. And so now your hats are different. Your responsibilities are different. And now it's not just me. So now I'm like, did you do this? Did you do this? Did you make sure you did that? But overall, I'm really excited about it.
That's awesome.
Yes.
Well, best of luck to you. And
Thank
I think you're
you.
going to just crush it. So
Thank you, my
obviously
friend.
everything that's worth doing is hard, to be honest. And so, there probably will be hard in the journey, but it'll be well worth it.
Yes,
So
absolutely.
that's
I
really
totally
exciting.
agree. Thank you.
Well, let's break down the numbers.
All right, let's do it.
So I'm going to get your feedback on some of these thoughts. Some of the numbers that came back were actually interesting
Very.
when we were talking about it. So
Very.
listings in 2023 of February was 1,732, and in 2024, 1,876. So we keep talking about this low inventory, and historically in 2023 it was still low. So we're not seeing this dramatic we're
Decrease.
back at like regular levels.
Yeah.
That said, we are at an increase of inventory.
Right.
So it's 8.31%.
Yeah.
What are your thoughts? Have you seen, I don't know if 10%, roughly 10%
Yeah.
is enough to be like, wow, there's so many more
Yeah.
houses on the market.
Yeah, I mean, I don't feel like it's a dramatic change, but I do feel the change, though. I felt like last year we were in a place where you couldn't find anything. I mean, nothing.
Yeah.
And now it's in a place where, it may not be priced the way we want it to, but you're seeing a little bit more.
Yeah. And I think, so we're going to keep on doing it because I think that is the story of where we're at, the price.
The price.
So solds, 1,257 in 2023. 2024 was 1,208.
Yeah.
So we're positive on the listings.
Yeah.
We are negative on the solds by almost 4%.
Yeah. And the price is the reason.
The price is the reason.
I truly feel that. I mean, I'm seeing price reductions across the board.
Yes.
Everywhere. And it's not like small decreases. I mean, I'm seeing $5, $10, $15,000 decreases across the board.
Yeah.
And so I think that plays a big part in those numbers.
Yeah, and it is this thing of you try to give your clients the best window, right? I never say, hey, list at this exact price.
Exactly.
But I give a window. I say, on the high range, you're probably going to sell it quickly or slower.
Right.
And on the low range, it'll probably take, it'll be a quicker, contract.
Right.
And typically, not always, but typically the clients like the higher number.
I'll take that one.
They're
More
like,
money?
what's
Let me
number,
take that.
door number 2?
Let me take that one.
Which I understand, but we're trying to gauge, and this market is ever evolving, and rates have not popped down to make affordability better.
Yeah, absolutely.
And even though I always tell my clients, it's not that your property is worth less, but in this current market, when people are borrowing 8% almost,
affordability.
Yeah,
It's a
7 to 8% is what people are borrowing, depending if they're investor or owner occupant.
Yeah.
It's not affordable right now.
Right.
So if you want to sell it right now,
quickly,
this is what your property is worth.
And I think that's the hard conversation that some agents aren't having with their clients. And then there's also this. I think that you have a lot of sellers that are caught up in where we were a few years ago, not even just where we were last year or, because these were the same conversations we were having last year, even more so, right? But I think they're caught up in those COVID years, and now having those hard conversations, the client isn't always, receiving that information the way they should. So you have to have those tough conversations to say, hey, look, I know you thought you could get this, but in actuality, it's really worth this because of this factor in terms of affordability and interest rates.
Yeah. Yeah, 100%. So average sales price in 2023 was $285,350. And in 2024, it was $323,000.
That is crazy.
733. Yeah. So that was a 13% increase, which I will say average. I don't really love average sale price. I've honestly thought about pulling it out and just using medium.
Yeah.
Medium was 247,000. And in 2024 is 271, which is a 10% increase, which is still significant.
Still significant. Feels a little bit more realistic for what we're actually feeling and seeing.
Yeah.
But it is very interesting.
Yes. Yeah.
To watch that increase.
And I probably should have done this. I should have gone back to February's interest rates of 2023. Actually, I'm going to do that real quick because we'll get into it later in the episode, but we're roughly at 7% now.
Yeah,
so if I do the 5-year and do 2023, should have prepped this, but hey, this is live.
Hey,
we're just in the moment.
It is.
So February 2023, we're at 6.32.
Interesting.
So, we're probably at a roughly the same interest. So that 10% on a medium of appreciation, it feels odd to me.
It is.
And last month's appreciation levels was 6%. And then December's appreciation levels were 7%. So
yeah, and it's a lot of factors that go into it.
There are.
When you break it all the way down. It's neighborhoods and
Yeah. But I mean, those are strong appreciation levels. I'm actually surprised with those. So that is good.
Me too.
But going back to list to sales price, so this is basically the factor of what you listed for what it actually sold for.
Yeah.
In 2023, we saw 98.24%, and we're at 98.63%. So that is overall trending with. Yeah. People are listing too high. Yeah. I don't want to say too high, but they're listing higher.
Yeah, exactly. It's still not a huge difference.
No, we're talking about 2% difference.
Exactly. Yeah.
On average. Mm-hmm. But for the most part, we're looking at price reductions.
Yeah.
And, sellers are expecting X. Buyers can only afford, Y. And how can they meet in the middle,
Yeah. I think it is. I think we're working our way to a balanced market. I think it's starting to stabilize. And I think that you have sellers who are starting to see, okay, well, maybe I do have to come down to get what I want. But that buyer is like, okay, I still have to pay this though, right? Yeah, I may not be able to get the closing costs and this or that, but I am willing to pay you this, right? So I think
have you seen a lot of buyer concessions on the closing costs?
Honestly, it depends on the side of town.
Okay.
And obviously days on market as well. I'm seeing that there are some people who may have put their properties on the market, towards the end of last year, and now we're going into this year, and now it's like, ooh, you might have to go ahead and drop that price, or you may have to give concessions in order for it to work. So I don't know. I mean, it depends on the side of town, but I have seen them.
Yeah.
I have seen them, but I'm also seeing multiple offer situations as well. So it's kind of a schizophrenic market, honestly.
Yeah, and I would agree. And in general, is a Birmingham trend.
Yeah.
It's very dependent on the area you're buying and the price point you're buying. So we're going to break into some of those areas. So we pulled out the data from probably some of the higher end areas, which will hopefully help see the strength of that specific market. Yes. So Vestavia, Homewood, and Mountain Brook. Okay. So we're sitting at list in 2023 was 127 properties.
Okay.
And in 2024, it was 141 in those three markets. So an 11% increase.
Okay.
Solds went from 68 in 2023 to 86. So that's a 26% increase. So pretty strong increase.
Yeah.
You ready for the, let's just do medium. So 502, 502,000 is the average. And 586 for a almost 17% increase in appreciation.
That is insane.
That's money.
That's
insane. Like, because the supply, I think probably if you look back at the data,
Yeah.
If you want to be in those pockets, the inventory is still so low.
Yeah.
I mean, I know a buddy of mine is looking in some of these pockets, and I just was like, man, is it really? He's like, man, it's super hard to find stuff. And I was like, is it really that hard? You know, I was like, and so I just pulled Homewood stats one time, and there were 68 active listings.
Wow.
And I think 40 something of them were under contract. Wow. There was only 12 active, like not under contract.
Wow. I can believe it though, because in a lot of these neighborhoods, it's like, you also have to consider the fact that you have sellers who are like, man, either they've been there for a long time, a very long time, and they've raised their kids there, and now, they just don't want to move, or they love the area and they just know how hard it is to find something, and they can't find anything new.
Once you're in, you don't work it out.
I'm in, right? And so you have that factor, but then at the same time, for those people who did buy during COVID, well, I got a 2.5 interest rate.
Yeah.
I probably don't want to leave immediately and go take a 7% interest rate.
Yeah.
So
it is pretty crazy. And medium days on market, ready for how low they are? So in the general market, they were 14 and 16. It's 4 and 3. Wow. Yeah.
Wow.
So these are very high demand areas that So let's move to Hoover, which I would consider kind of, that middle general tier, a little bit lower price point. You can see it from the medium sales price.
Right.
So 232 in 2023 of listed, and 212 in 2024. So we're actually at a negative.
Wow.
So it's just interesting to see
the
these
different
things.
dynamics.
So definitely negative in the listed. The solds was 131, and in 2024 is 164. So we're at a 25% increase.
Wow, that is so crazy.
Yeah, I'm telling you, these numbers go. But it just kind of goes back to, like, the stuff that is on the market is selling. You know what I'm saying?
Yeah.
So and then the medium sales price is $400,000 in 2023, and in 2024 it's $436. So a 10% increase. Yeah. So pretty congruent with the other numbers.
With the others, right.
And medium days on market, 4 to 9.
Wow, still though.
So pretty low.
I think you also have a lot of people who didn't buy during that COVID spill as well that are like, I'm not going to miss out this time. Yeah. Not this go around.
Not this go around. You fooled me once.
I'll take what I can get right now.
Yeah,
That's what I think is happening.
I agree. All right, so last kind of breakdown we'll do, and we'll probably change areas, as time goes on. But Pelham, Helena, Alabaster, kind of that southern western corridor off of 65. It's very popular, lots of good schools. And so list price or listings in 2023, 128. And in 2024, 123. So not a number difference, but it's like a decrease of 4%. Solds went from 87 to 94. So an increase on solds.
Slightly.
And then medium sales price was 280 and now it's 299. So a 7% increase.
So still congruent with.
Yes. Yeah. Congruent. And going back to the medium sales price, we see that overall we're at a 9%. But when you break it down, the medium in Mountain Brook was at 17% almost.
Which is insane.
Which is crazy appreciation. Yeah. But then you go into a Pelham, Helena, Alabaster,
7, 8,
and they
10.
7, 8, maybe 10. So then when you kind of bridge into other areas, like everyone's kind of looking at this general market and saying, oh, I expect 10%. It's like, well, your pocket may actually be 5%.
Yeah.
If that, and so those are some conversations you got to have with your client. But
absolutely.
All right, and then medium was those are higher numbers, 25 to 20.
Yeah.
So I think as you decrease in the price points, of the medium sales price, the numbers start to definitely skew because the demand's just not as high.
Absolutely.
So anyway.
Yeah, very interesting.
Very interesting. Let's talk lastly about because you're an expert on interest rates and the Fed, right?
Yeah,
you love some good.
That's on my title list.
But I always like to recap where the interest rate has gone. So the beginning of February.
Those liars.
I know, right? They're like,
I thought you said. I thought you said they were supposed to come down already.
You know,
what is this?
It's so funny because, they do these predictions, but at the end of the day, they're looking at current data.
Yeah.
And it is so funny how the market reacts to even those predictions.
Yes.
Which is crazy.
Yes.
So
I think that, honestly, the prediction alone is what got a lot of people back in the game, honestly. Yeah. Like us, oh, wow, it's going to be 4 to 5 decreases this year. Let everybody know. And now we're like, it's coming, y'all. I know joking. I told you that they said that.
Yeah.
They're coming, though. They're just not here yet.
Yeah.
But I did see a slight decrease at one point, right? But now we're
we're back
up where we were.
Yeah, I mean, the beginning of February was 6.63.
Yeah.
And we're at 6.94 at the end of February. So 31-point jump.
Yeah.
And everybody was hoping for a decrease of a quarter point.
Right.
And
the disappointment.
In people's minds. I think it's a mindset thing, to be honest, because at a $150,000 house, I could probably run the numbers.
Yeah.
The increase in actual monthly payment is not
significant
at a quarter point.
And I do think that you're right? It depends on the clientele, because at a certain price point, those rates matter a little bit more as opposed to at a lower price point.
Right.
Because now it's like, but at the same time, some of those lower price points, qualify for some of these programs that essentially, can help
offset
maneuver the rate. Yeah.
Yeah. And in addition to that, I think it's an interesting thing that there's something in human nature that doesn't want to feel like we missed the boat.
Yeah.
So
especially after you've already missed the boat.
Yeah. And so, we're looking and we're, saying, okay, they're going to potentially drop rates.
Yeah.
What if I bought a house and the next day they dropped half a point? I would feel so stupid, or I didn't.
Yeah.
And, I think to those people, I just think you cannot time, just like the stock market, you can't time the market.
It's no way.
And for most people, this is a home purchase for your personal, life. And so you really need to be thinking about the bigger picture than, did I miss the boat on a half a point drop?
Yeah.
You can always refi down the road. They say refi, if it drops a point or more, that's a good time to refi. So
I don't think that's been the conversation that I've been having with my clients. Like, hey, look, as long as you're comfortable with this payment right now, be comfortable, right? Yeah. Regardless of what you buy, when you buy, be comfortable with your payment. I think so many times people get caught up on the rate, but again, we're not experts with interest rates, and neither are they.
Yeah.
So my thought process is get into the house, right, and allow yourself to be able to be comfortable with your payment. And as long as you're comfortable with your payment, eventually they're going to come down.
Yeah.
So when they do, then you haven't really missed the boat at all. Now you've really lucked up and got the best of both worlds, because you may have, got that house after they did a price reduction, and now you can refinance later and still get the lower payment. Best of both worlds.
And I think we're going to see, I was talking with Lauren the other day. It was a mutual agent that we both know, and she's gotten in a couple multi-offer situations already.
Yes.
And we're early March.
Yeah.
So, I think things are going to, especially, like I said, in the Mountain Brook, Vestavias, Chelsea's, Hoovers, competition, whether the market's up or down, it's competitive.
Yeah.
And so, it's only going to, I don't want to say worse, because that is just what it is, but
it's the truth.
It's going to get more competitive. She was in situations where it's 3 offers.
Yeah.
You give it another 2 months and you tick down a half a point.
Yeah.
You're going to look at 8.
Yeah.
That's what's going to happen.
Easily.
So I'm always a big fan of saying the best time to buy real estate was 20 years ago.
Absolutely.
And the second best time is today.
Yeah.
Because it's such a big investment that timing the market is just something that you just don't want to try to do.
You don't. And then you're also, even looking at the numbers, right, in terms of appreciation, even if it is 5%, 7%.
Yeah.
But in those other pockets, 10, 14, regardless, though, there is still appreciation across the board.
Yeah.
So we're not seeing that number go down.
Which is good for Birmingham.
Yeah, I think that's the key in itself. So it's like, regardless, the more time that goes by, that opportunity cost is still there.
Yeah.
Because you're still losing money.
Yeah, 100%. Well, I think this was very informative.
Yes, absolutely.
I'm excited to see March and April's numbers.
Yes.
Because I do think that, personally, as a person who's in real estate, I would like lower rates. But from a financial, overall scheme of our economy, I think the whiplashing of rates has been really tough on people and created a lot of instability.
I agree.
So I'm actually, on a bigger scale, I'm actually for some steadiness in rates. And I've actually said it for over a year now. I think they need to keep rates at 6% for 2 years.
Yeah, I mean 6%.
And just let things steady.
6% is still not bad though.
Not bad.
And I agree, because then we have some stabilization. Yeah. Because otherwise, it's gonna get wild. It's gonna get wild.
We went crazy, but not too crazy.
Not too crazy. Let's not get down to 4 right away. Okay, because we're gonna be back in the same boat we were during COVID. Even though those aren't COVID interest rates, it's going to feel like it for all those people who sat, on the sidelines waiting for them to come down. And the moment they hear, oh, they're down, everybody's back in the market. Now we're back into super multiple offer situations where we're competing against who knows how many people in this multiple offer situation, from 3 to 30, just like that.
Yeah, it is definitely, because inventory is still keeping the market stabilized, and new construction's still very expensive.
Yeah. And it's not fast enough.
It's not fast enough, yeah. But even in the new construction, it's not economical at this point, which is sad. And I've had Gusty in, and we talked about this, lower income. But the price per square foot, you can't build a sufficient house for $100,000.
No. At all.
You cannot
and
at
make
all.
A profit.
And you'd be losing money. So so at this point, even new construction starts at a minimum of $250,000, $300,000, which is unattainable for so many people. Yeah. And so even in that, I think there's some big housing market problems that have to be addressed.
I agree.
And we're just trying to solve them one at a time here on the podcast.
One at a time, guys. One at a time. We can only do so much.
Yeah. I'm good at pointing out the problems, not solving them, but
we're going to take it one step at a time.
Yeah. But hopefully that's helpful for the people trying to figure out what's happening in Birmingham.
Yeah, I think it should be. I mean, ultimately, like you say, the best time to buy real estate is right now. The opportunity, I think, is still there. Yeah. Growth is still available.
Yeah, we're seeing good appreciation year over year. So
I think that's a benefit in itself.
Yeah, it's good. Well, thank you so much for taking the time to hang out again.
Yes, anytime.
All right, we'll catch you later.
All right.